here to discuss the market, investment landscape, and so much more. I want to welcome someone who we know well at our Nasdaq home. Adena Friedman is the Nasdaq CEO and chair, and we're here in a different home.
Oh, we are.
Here in the snow.
We are. Another beautiful day.
What a beautiful day. I have so many questions for you just because I think you've been coming to this event for a very, very long time. And you can always get a sense of sort of the mood. Sometimes it's a contrarian mood, which is to say you look back and you go, maybe it wasn't right.
Right.
But what do you think is, I mean, we're all talking about what's happening back home in Washington. But how do you think it's being perceived here?
Well, I think, first of all, there's an enormous amount of focus on the economy. Right. And the comparison of different economies, all the policies that are coming out and what that's going to mean in terms of driving growth in the U.S. versus Europe. Are the governments ready for that? Are they prepared for thinking about the changes in the way that they want to operate in order to drive growth and compete with each other? I think that's been very much the talk of the town so far. Well,
here's a question related to the talk of the town, which is that the EU commissioner was speaking today and was talking about what she thought was a harsh strategic geopolitical universe. And the reason why she said harsh, and I'm curious from your perspective, you do a lot of international business. Mm-hmm. And I imagine you want a lot of international companies to be on the Nasdaq exchange and to work with you. Is there any fear that you have about retaliation if, in fact, tariffs go into place, what other countries ultimately do in terms of where they ultimately decide to list, what companies they decide to work with?
Well, I think, first of all, the economy is global and the capital markets are global and therefore money flows are global and risks are global. So as we think about the solutions that we provide to other exchanges around the world, we provide technology to 130 exchanges. We now have 20 central banks that work with us on risk management, anti-financial crime. All of those are kind of universal challenges and, frankly, require global solutions. If you had a different solution for every country, it would honestly make the complicatedness of the financial system even worse. So I actually think we sit in a place where we can be very global in the way that we deliver solutions, because of the fact that money flow continues to be global. Now, on listings, we continue to believe that the United States has the deepest pool of liquidity, the most diverse investor base in the world, and that is a natural attractor of companies. And I think that will continue just because of the economic position that the U.S. is in.
It's a question I've asked, actually, many of our guests, this next question, which relates to ESG and DEI and all sorts of things that were OID, climate, all topics that I think emanated in many ways from Davos over the years. I remember sitting with you when you announced your plans to require disclosure of board members and gender diversity and where people came from and things like that. In retrospect now, given the entire push almost away from that, at least in the United States, and you feel it a little bit from either other countries in Europe and elsewhere, was that the right decision back then, the wrong decision? How has your whole worldview about those issues inside corporate America changed, given even the changes we've seen in the last 2 weeks by corporate America on topics like this?
Well, first of all, we are very proud of the fact that we introduced a rule that allowed for disclosure. But if you think about what we were trying to achieve, first of all, it was very demand-driven by the investor universe. Investors have been honestly asking us for years to give them better disclosure, more consistent disclosure on board composition. So that was a big driver. And then the second thing is that I feel that as we think about modern governance, I do believe that the rule did elevate the conversation as to modern governance looks at expertise, diversity of expertise and experience and background so that you reflect the community that you operate in and the clients you serve. So that really did elevate the conversation on modern governance. We certainly accept the court's decision on the rule, but I do feel like it has elevated the conversations. Inside of NASDAQ, we continue to be extremely focused on building the right culture that allows us also to have a very diverse and inclusive community of teammates so that we can continue to serve a very diverse investor base. So to me, I feel like these things are going to continue to operate, just maybe not in the same spotlight as they have in the past. I don't know if you saw,
but one of the executive orders yesterday that Trump put into place relates to DEI, effectively getting rid of it, at least by government standards. I mean, it's a very interesting topic, and I'm just sort of curious, as you watch companies, some doing it under pressure from sort of the Robbie Starbucks of the world, and then others doing it maybe under pressure from the president, or maybe because you think the whole country has just sort of shifted its view, but what you make of what's happening. Just in the broadest context.
Yeah. So first of all, I do talk to a lot of CEOs, but I can't reflect on the entire world of corporate America. I can say for NASDAQ, we really continue to look at everything that we do in building the right culture. And we do believe that a place where we feel like people can be themselves and can operate at their highest potential and have diversity of views and diversity of backgrounds actually makes us a better company and makes us perform better. So we're going to continue to operate in that way. And I think that at the end of the day, these things come and go with different political cycles. But at the same time, I believe that there's an undercurrent that continues to be supportive.
Brian Armstrong from Coinbase was here at the very beginning of today's broadcast. And we're talking about crypto. And boy, is this president about crypto, right? How does that change things for Nasdaq? Do you say to yourself, we need to be in the crypto business in a big, big way?
Well, first of all, we already are supporting the crypto ecosystem. So we provide technology to crypto exchanges, both trading technology, clearing, settlement, and surveillance technology to crypto exchanges around the world. So we are a very scaled technology provider to that ecosystem, and we're seeing a lot of demand for our technology as the ecosystem continues to mature. We also list crypto ETFs and others both in the U.S. and in Europe on our exchanges. As we think about the regulatory landscape that could come, I mean, what is actually quite encouraging is the idea of going from an enforcement regime around crypto to a regulatory, let's actually write proactive rules that gives everyone an understanding of the rules of the road. And if there is clarity in regulation, it allows regulated markets like ours, and we've talked about this before, we like operating in regulated markets. If there is clarity in regulation, it allows us to assess what does that mean for us as an operator of markets as well. But let's see how the regulation comes out.
You spend a lot of time, people don't appreciate that Nasdaq has a big financial crimes business, effectively tracking. How do you think about the context of that?
Well, first of all, it's actually interesting. The technology that we have to support banks, we have 2,500 banks where we do fraud detection and investigative work, as well as AML detection, investigative and reporting work. So it's a very scaled solution. But what we did do also is build out capabilities for us to say, if a bank wants to have both a digital wallet and a fiat wallet, we can basically provide comprehensive anti-fin crime to support them in digital wallets as well as fiat wallets. So we do think that as the crypto ecosystem continues to mature, there's already been a lot more emphasis on AML and fraud detection and systems.
But by the way, Brian will tell you that people have been debanked. I mean, the crypto world looks and says, oh, my goodness, all these people were debanked because of this, because they were in the crypto business. Do you think they were debanked for that reason or because there was just too much risk involved?
I think it's both. I actually do think it's both. I think that banks take anti-financial crime extremely seriously. However, the one thing I would say is in the next iteration of crypto, which is obviously we're on the dawn of that, what does that look like? Number one, I do think a lot of enforcement decisions have changed the nature of the markets. Number two, I do think there's been an enormous amount of focus on AML and fraud detection. The technology itself actually can support that quite well. It's a matter of how you implement it. And then the third thing I would say is that if there's regulatory clarity, there will be more of the traditional financial ecosystem that starts to participate.
But there's going to be companies that are going to try to go public through crypto. And will they be bypassing
you? That's a different thing.
you?
So I think that's what I mean by regulatory clarity. The couple things that I would focus on in the regulatory landscape are, number one, let's stay focused on investor protection. Because at the end of the day, that is a critical component of financial regulation. And number two, let's also make sure that we have clarity on how we test and other things. What is security, what's not.